Hey, it's Mike Adama with another video playbook. Haven't done one of these in a while, but I think this opportunity is good enough to do. So I am doing this for myself to get another rep in, as well as present this for my submission for the SMB playbook competition. So it's 9 o'clock on a Friday, and the regular traders stumble in. It's like a Billy Joel song. But yeah, that's what I'm doing. And people often ask me how long it takes to do one of my pretty detailed playbooks. And let's just say it's 9 o'clock, and I probably started at 4 o'clock. So what is that, 5 hours? So yeah, I love playbooks. So let's get at it, because I think this is probably one of the coolest playbooks of the year, even though it wasn't like a huge trade for me. But it was a huge learning opportunity. So, sometimes you got to learn instead of earn. And that's just trade for me. So we're going to talk about the opening range break in SNDK that happened today. This is an overt extension setup, day one earnings. And today is January 30th, 2026. So let's get after it. Let's see if I can get these slides to flip. There we go. So about me, there's me with the arrow. And handsome Carlton and Enrique and Jeff. So I will be attending the SMB Summit for the second time, and hopefully seeing all of you there and talking about trading for a couple days, and that'll be fun. And there's my mentor, Justin Spiro. I've been trading for about 2.5 years. I live in Salt Lake City. I ski, I climb mountains, and I trade. That's pretty much all I do, full-time for 2.5 years, because I burned the boat. This is what I do. I'm originally from the North Shore of Long Island, just like at least one or two traders, or I guess partners at SMB. So it clearly is the place, the breeding ground for like top traders. I'm a recovering consultant and corporate leader, so I spent 20 years in the corporate world, and about a little while I've been managing my own business, and now I manage my trading business, and maybe I do some other stuff. I've been with SMBs as a independent trader, buying training, since 2023. So I've done DNA, winning traders, scalping, fast tracks with Justin almost 2 years ago. Inside access member for almost a year, and tier 3 member since 2024. I love playbooks. And sometimes I post them on YouTube, just like this one. And my Discord is Mike Adamo. It's not complicated. And I also work with or lead a pod of developing traders called the FOMO Fighters. And my current focus is becoming more bionic and building a broader playbook. I am definitely more of a momentum breakout trader. And that's where I've been most comfortable. That's where I've kind of grown up. And that's where I find consistency. But in markets where that doesn't work as well, it's a little harder. And so I'm trying to build a broader playbook, and certainly getting better at parabolic overextensions and other kind of mean reversion trading is the key. I'm also focused now on backtesting, developing automated trading strategy. So we'll talk about this in the technology section, but rather than sit there and like huck away at like small size and some of these mean reversions, I want to build fully automated systems for that. And I am working with the Bionic Trading team and Dave Mabe to do that. So super fun. This is playbook number 201. So I do a lot of playbooks, and a little less lately because I've been doing so much coding and building alerts and backtesting and building automated trading strategies. But still, I love me a good playbook, and this is one. So let's hit it. So bigger picture. So Qs made an all-time high back in October of 637. And since then, they pretty much traded in a sideways range. The interesting thing is the 100 SMA kind of looks like it's forming a wedge. So we've been finding support on the rising 100-day simple moving average, which is interesting. And we've been getting a little bit tighter. We did sell off recently on more tariff fears, but again, found support. And once we had a taco moment, Trump chickened out. We aggressively bought off that 100 simple moving average and had a series of up days culminating in a gap up to and maybe even above in after hour or pre-market, pretty close to all-time highs. We then, earlier this week, we did that, but we failed. And it was, amongst a big week of tech earnings, Tesla, Microsoft, Meta, they all kind of got slammed. Um, and then we had FOMC on Wednesday, and we officially paused easing. And since that bullish impulse, price action has faded. We've seen signs of distribution. Outflows have emerged. For a while now, with a few exceptions, breakouts have struggled. Fade trades have been more effective, which is why I'm trying to build my playbook broader, because that's not my power alley. And, notably, memory stocks, space, and metals have been bucking the broader kind of fade trend. They've been trending higher. Gold and silver, so metals, have been among the strongest themes in 2026. So we got space, metals, and memory as kind of the strongest sectors. So let's look deeper. So the first place we're going to look is at my ETF filter, kind of the top weakest ETFs as well as the strongest ETFs. And you can see for the day of this trade, this is a picture at the end of the day, that broad risk off rotation, and this trade was on a Friday, with aggressive selling in an offensive and thematic ETFs, while defensive and voluntary volatility caught a bid, right? So high growth, momentum, and speculative kind of sold, and the more defensive things held up. And I think it is notable, and this is a theme that I've seen, in my short 2.5-year trading career, is like when parabolic shorts or like blow-offs or stuff fails, like they tend to happen like together. So we had metals failing today, and we had SNDK failing today, and we actually had some other good parabolic or blow-off kind of action earlier in the week in metals as well. There was some notable silver fails, I think 2 of them, and I think maybe today was one of the bigger ones. But it's like, this is what's been working, which isn't the greatest because it's not what I'm the greatest at. So this is why I do these playbooks, to get better at these things. So this is a learning playbook for me. This isn't like hey, I made all this money and I'm amazing. This is like, well, I'm working really hard to make all this money on this trade. So, big picture sector analysis map. So you can look, we have kind of the defensive sectors at the top. We have more offensive sectors. You can see space being pretty strong. And then you can see kind of like the metals like failing recently. You can see the dollar's pretty weak. IBIT's been pretty weak. Bonds have been kind of neutral. The SPY is holding up well. The Qs are going sideways. SPY's been relatively strong. Equal weight is a little bit stronger in the RSP. And you got the IWM kind of lagging a little bit. And so, the defensive sectors are firm rather than weak. Small caps are underperforming. Leaders in memory space themes remain structurally strong, but are extended. Macro's kind of mixed, right? Bonds and the dollar are stable. Gold, it was getting money. Crypto's cooling. And so again, this kind of supports the theme of mean reversion and selective stock picking, and not like broader momentum expansion, which I love me some broader momentum expansion, but this is not the market for it. So let's look at some of my cool indicators. The first one is my regime indicator, where it says mixed chop. So this is looking at volume inflows and outflows in SPY and Qs. So the blue would be kind of positive inflows. And unfortunately, you can see the dates. Like you can see September and October, we had a lot of inflows. That was some really good like breakout trading. We had kind of an inflow in December. You can see we had a pretty good outflow kind of in January early. We tried really hard with a couple days to kind of pop up blue, and we're going pink again. So not the most bullish thing. And then the vol cycle, we've been contracting. So we're coiling up for something, right? So volatility in the Qs is contracting. And, the OD line's kind of hanging in there, and breadth is like nothing remarkable. But overall, this regime does not support sustained bullish environment and instead favors distribution outflows, short-sided fade trades over momentum-based breakouts. Are you recognizing a theme? Because the data is showing this and the trades are showing this. So let's look more. So bigger picture SPY, so this is looking at SPY, and thanks for Garrett. I basically stole this stuff from you, Garrett, and reverse engineered and built it myself and coded it up. So now we're looking at like the SPY. How many issues are above their 50-day moving average, their 100-day moving average, and their 200? And you can see we're kind of hanging in there. We're not having this big uptick like we were below and we got above, like we did kind of in the April-May timeframe. But we're hanging in there. We're kind of consolidating above is what it feels like to me. We're not fading. We're not failing big time like with these issues, but we're not also like putting in a bunch of new, well, I guess stuff is already above, so like it can't get above. And we're not putting a bunch of new stuff in above. So that's what I would put. Like, it's not negative. It's pretty positive. And, this is the SPY, and the SPY is actually stronger than Qs. So, like, it's worth talking about. So let's look at the NASD. So the NASDAQ stocks making new highs. And we're looking at 52-week highs, quarterly highs, monthly highs, weekly highs. And that the 52-week would be these two. Monthly would be, or quarterly would be this. Monthly would be here. Weekly would be here. And what we're saying is that while new highs are still occurring, the rate of expansion has rolled over and is meaningfully lower than the prior momentum phase, right? So there's less stocks making new highs on all of these kind of time frames. It's not collapsing, but it's a loss of momentum and follow through, which kind of makes sense, right? Like we're getting up there, we just can't like get past. So this also could be tied to the bigger picture where potentially with like tariffs and, not political, but Trump having kind of fights with different countries, Greenland, all this other stuff, that perhaps like money is not flowing into the U.S. Like it has in the past. China's getting more aggressive in different stuff. Apparently, like one of the rumors is that they were, stockpiling gold and silver. And so these things are not like bullish towards like huge global inflows into U.S. stocks, which I think is part of the reason we're getting up there, but we don't necessarily have the participants from all different places buying these highs, right? We're kind of fading these highs, and then people, it's a self-fulfilling process. Algo traders are shorting the highs because it's working. And until these people get blown out and a bunch of money flows in and something changes, like a big catalyst, we're kind of in a fade the new high market. And, buying like strong stocks into support has been working, but buying a high is not. And, all the better is like these kind of fade trades where things get really up there and then they come back down. So bigger picture market internal. So let's get into something we know. So the VOLD, notably on the day of this trade kind of trended down all day, and you can see kind of the VOLD here kind of more clearly, and you can see kind of negative VOLD on the NASD and the NYSE. You can see the advanced decline line holding below zero and the physical line going down. These are not bullish things. And you can see the cumulative tick also kind of building to the downside. And you can see generally the tick holding below the zero line. We had a little push above the zero line later in the day, but we saw several negative 1,000 ticks, as opposed to a day like Tuesday, where we were kind of holding above. We didn't see 1,000 negative ticks. Or Wednesday, we saw a little bit Monday, and then we saw a little bit later in the week, right? And you can see in the other things that later in the week was feeling a lot more or somewhat more bearish, right? So the VIX. So the VIX on the day of the trade was between 16.6 and 18.5, and you can see this in intraday VIX. This is a little bit more volatile than like a 14 VIX, which tends to support like breakouts and momentum, but we're certainly not in the 20 or 30 or 40 or 50 VIX. So, VIX in this range really supports individual stocks with catalysts and setups, not necessarily being the market in play. This is not the day to trade cues, but it does say to me that fade trading, again, has a little bit more edge than taking breakouts because, VIX being like a fear index, right? If you're fearful, you're not buying a new high, right? You tend to do that when you're like confident and relaxed. And so, this does support, again, kind of like that mid-high VIX is something that can support fade trading. So let's talk about why SanDisk. We're going to get into the details, but basically, we got three things we're going to talk about, which we always talk about in the SMB system: catalyst, setup, and trade, which we're going to get into. But also volatility. Why is this volatile? Because this is a hot sector. Memory has been one of the hottest themes of 2026 and was the theme in 2025 into the later part of the year. Also, a lot of people were off sides in this trade, which we're going to talk about. And traders a lot of traders were in massive profit. We'll talk about the numbers, but a lot of people were up a lot of money in this stock. So when it starts to crack, they're running for the door, right? So there's like volatility, there's movement. So it's a really, really interesting setup and probably one of the most unique ones of the year. But hopefully not. Hopefully we see a ton of these. I feel like there's an extra F in profit, so I'll have to fix that. So Catalyst. So SanDisk, it had a primary earnings day one, so earnings was the day before. We're going to get into the next slide, but I'll grade it an 8 out of 10 before we even see it. They did have a triple beat and raise. They had a clear upside surprise tied to AI and memory demand, the hot theme. And I'd give it, like I said, an 8 out of 10, strong fundamental driver with follow through and potential. They also had a technical catalyst, right? This is a 10 out of 10 overextension, presented very differently than the overextensions I've studied. So this is a really unique example that I think is fun to learn and important. But let's face it, SanDisk was stretched and then it gapped up 135 points. That's far. Immediately placing it into price discovery, right? So I would say that this is probably going to be one of the top 10 opportunities a year, and I'd give it a 10 out of 10 technical catalyst because this is very unique. I mean, I woke up and I saw SanDisk on my gappers and I said, is that right? Is it really at 666? The devil is acting as resistance. And then I talked to my other trader friends and they were like, that is like ridiculous. Look at that thing. And so everybody's seeing this as ridiculous. And imagine you wake up and you have SanDisk stock and you bought it at like $35 a share, not less than a year ago. And now it's almost 700. You might be like, wow, this is great. Let me lock this in before people realize and sell this thing. So, there's profit takers. There's people who chase this thing thinking it's going to go to 1,000, who bought the gap last night, right? Because it gapped up. People bought that. And then there's all the momentum shorts that are piling in and everybody's rushing towards the door. So really interesting setup. So stock selection. Category, elite, momentum, and earnings catalyst. Trend strength, one of the strongest stocks in the market. AI theme, memory shortage. It was up over 2,000% this year, or in a year. It had day one catalyst. It has a lot of liquidity. It traded a good amount of shares. It does have its downside. SanDisk is an IZ stock, and the options are spready and expensive, and the stock is spready and expensive. So it's kind of a scary stock to trade, at least for me. Maybe I'm like a wimp, but more experience will make me less wimpy. It does have widespread. Yeah, see, I'm talking about there, and why it was in play: combination of elite trend, major catalyst, volatility, and it was an ideal stock for trading intraday. So let's talk about intraday fundamentals, which is a slide we're familiar with. So earnings were announced the night before the trade. They earned $6.20 versus $3.50. That's a 77% beat. Like 20% is good. That's a huge beat. The revenue is up 13%. So you got double-digit revenue and EPS, 61% year over year. This is like NVIDIA-esque, right? And they raised revenue guidance. So like, this is a great catalyst. Maybe it's going to 1,000, right? That's what people are thinking. And I think, to step back, this says something really interesting, right? Because we have this huge stock that's been up a lot. We have pretty good numbers, and it sold off today. So maybe it gaps up and breaks out Monday. Who knows? But like, this does say something about the appetite for chasing highs and risk. It is a triple beat and raise, but that was already like the expectations were extreme, right? Look at the pricing. It was great, but not better than great. And I think, it's like sell the news, profit taking. And then, the tape and context worked against it because like we actually like sold on the day of this trade. And we talked about it a little bit in the bigger picture, but I should have put an intraday cues chart, but we had a lot of stuff selling. So we had a tailwind on this day, right? We should go back here because this is important. If you look at the cues, right? It's not like the cues were breaking out. The cues were not looking very healthy. Let's look at what the candle looked like for today. Yeah, see? This is not like a pretty candle. So we went up. We had this like upside reversal yesterday where we came down to the 50 and we bought hard. But then we gapped down and we sold today. So like the people who bought that upside reversal in the Qs or, many stocks, like they're not super wrong because we didn't go below it, but they're not right. They're not happy and they were hitting out. And, silver was going down. Like, my automated short trading strategies were blowing up today, because that's what was in play as shorts. So, this is better than SanDisk, like trying to melt when the market is going up. Would have been a different tape. So, let's look at the technical analysis, because we don't normally see charts like this. So back, remembering the day in April 2025, so like less than a year ago, old SanDisk was at $27.89. It was on a base. And then I wish I had the dates here, and that sucks that it cut off. But by April, this is monthly, like May, June, July, August, by the summertime, we broke that base and we started trending up, and look, volume came in. So SanDisk starts to march, and look at this beautiful alignment of all these weekly moving averages. We got the 30-week, the old 30-week, which our friend, one of the greatest swing traders ever, uses. We got the 52-week in there, and they're all super lined up, right? We have this move, then we have a nice base that forms for 1, 2, 3, 4, 5, 6 weeks. We break out, and we have a move. And this move, look at those candles. They're expanding. The range is expanding, and the volume is expanding. So we're like accelerating. So between April 7th and January 29th, SanDisk is up 2,327%. So just think about that. If you put 10 grand in this thing, and, at the time, 10 grand, you got divided by 27.89, you had 358 shares. And then you multiply that by 650. That 10 grand is worth $233,000. You might sell, especially if the market's going down. And you probably, if you held it all away. But like, if you got in here, you're up 170%. So like, if you're a swing trader and you bought this thing and you held it, there's no place in here where you're really wrong. But you got to say, what's the risk to reward now? Because it's 700, where's it going to go to 1,000? And so I think anytime we have a crack, we start seeing people, bail out. So, on the weekly, this is a very unique weekly chart. We see these, but it's a few of them a year. I think of NVIDIA a few years ago doing stuff like this. I think of SMCI a couple years ago doing stuff like this. But, it's not something we see 100 times a year. On the daily, I think what's important is we had this long base and we had this pretty reasonable move. We had a shorter base, and then we start getting a little silly. Like, we made up as much or more space as this with way less consolidation. In fact, the only consolidation really has was 1, 2, 3, 4, 5 days against 550. And then in 3 days, essentially, we went from 550 to 700. So we are really accelerating. Super accelerating. And we're outside. This is our 5 ATRs from a 5-day high. So we're well outside that. We're 18% above the 5-day moving average. And, we're extremely short-term stretched. And I guess we could say we had 3 gaps. So, I struggle to identify this. I think it's because this gap was so big. I'm normally looking for those big range extending gaps in this. And this kind of was a little tricky for me. Again, I don't know this setup that well. But it didn't strike me as like the A+ overextension. Because normally they happen without like earnings. I've never actually seen one in my short trading career with earnings. So this was just kind of a different flavor. And it did kind of trick me a little bit. But I recognized it was different. And I got involved. And I learned from it. And I think that's important because, missing these things means you miss the opportunity to see what it feels like, what it tastes like, what it smells like, what it is like to trade in something like this. And, it's a big, expensive stock with a spread. It's not for wimps. So the 15-minute. So on the 15-minute, here's that range we were talking about, that like 5 day big consolidation, 5 whopping days, where what did we get down to in that 5 days? We got down to like 450, you know, like, and so we broke that, and out here we had, a reasonable trend, and we retested it, and we're kind of holding it like 550 before earnings. And earnings releases, and we gap up to 620 as like a reaction high. We hold the low at 600, and we take out the reaction high. Pretty easy, right? Pretty quick. And we make a high like 670, 660. We take that out. And then in the pre-market, we're kind of a little bit flat, but then we make a new high. So we got like kind of Steve Spencer's money trade. We're like, the after hours is bullish. We take out the reaction high, and then we take out like the pre-market high. So like that's really bullish. But keep in mind, we're up from 550 to almost 680. It's 130 points. It's pretty huge on a stock that's up how much? Like, this rubber band's getting really stretched. But nonetheless, people bought this, right? And so when we started to do this, they're wrong. They're wrong. And you got to worry where this is going. So we actually get the full gap fill. We take out pretty easily the 640 level, which was pre-market support. We have 600, which was also pre-market support. You can see it, but it does support for a while, for, like 75, 80 minutes. It actually breaks, it pulls back, and then it fails, it grinds down, and then we get to that final capitulation extension leg. We actually we fill the gap, and we go past it, and then it puts in the highest capitulation volume, right side of the V, and we buy up into the close. So really interesting price action, and excellent trader. Well, I don't know about excellent trader, but excellent trade, hard trader. So on the intraday, so this is on the 5-minute, you can see the clear selling pressure, like these wicks, like they're stuffed on the open into pre-market high. Really interesting. Like, I guess if you're more aggressive, you got more tape skills, this and you've traded this, is probably a great risk to reward to get involved. We put in kind of this 15-minute range, we break that, and we kind of pretty quickly move down to the 600 zone, find support. We're getting tight. We break, we rebid. We get into the 21 SMA or EMA. First time we've actually held above it, and it's like noon. And then we roll down, and we don't touch it again until we capitulate and do a 5-minute turn. So really, really good, kind of price action. There's definitely some buying in here. And this stock does touch prices. It's a $600-$700 stock. So let's talk about the trade strategy for a parabolic short setup, which again is a developing trade for me. So overextension occurs when price accelerates far beyond its short-term mean, following multiple gap up days, a momentum expansion, creating a statistical extreme that favors mean reversion rather than continuation, right? So here is the classic mean reversion setup. We got 3 triple gaps. We're outside 5 ATRs from a 5-day high. We gap up. We push up, we fail, and we target the low 2 days ago or the 5 SMA on the daily chart. And this is an example that people may recognize, and if you don't, burn it into your head. This is good old SMCI, one of the classic parabolic overextensions, which I also kind of noodled around with. But again, there's just not a lot of these, and at least for me, it takes a while to get good at. Where breakouts, I see a lot of them, and so I need to really burn this into my head and push myself on these. So we talked about the triple gap up, distance from the mean, so above the 5-day SMA, more than 8. Remember, this was 18%. 4 to 5 ATRs above the 5-day average. We were like way past that, and multiple green days in a row, 5 to 7 sessions. I think we had like 3, but that gap up was big. Exhaustion gap, and so these entries kind of occur in 2 ways, right? You either continue to go up, like you gap up, and then you buy and you squeeze up, and you run into 800 or 750, and then you fail on like a rubber band style entry or a stuff, a blow off, and then you put in a backside and you roll and you go through VWAP and you accelerate, you take out low a day, and then you start headed, like a freight train for the opening price from 2 days ago or the 5 day. Or you have the second, which is what we saw here, which is we try, but we really don't ever make it above pre-market high. And we start holding below VWAP, and we push up to VWAP, and sellers take control. And push up to VWAP, and sellers take control. And we start to grind down, and eventually the buying pressure eases, and we just roll, and we slowly accelerate through all these lows. I think in SanDisk's case, we did have people trying to buy it, which made it a little bit more choppier than some of these that just like flame through it. But it's an interesting thing. So, the target for this is either low of day, 2 days before, the 5 SMA, or in this case, a gap fill. So, the entry here was a 15-minute opening range break, which is a trade I really do like, and I trade a ton. I've traded hundreds of these. I've back tested it. I have hundreds of charts marked up in my book of charts. I probably have 50 playbooks on opening range trades like that were in a bigger, higher time frame setup. So this is when you have consolidation for the first 15 minutes. We're primarily holding below VWAP. We don't spend significant time above VWAP. We have a tight opening range, usually about 50% of a ATR is like the best. And we break the opening range with the highest volume of the day, which we did not do in SanDisk, but that's another like thing that makes it one of the best. Market context makes this better. The tape distributing, if we're doing a short or breakouts working to the upside, weak market internals, defensive ETFs, and the VIX, stable to rising in a mean reversion setup. So, stop usually goes either the high of the breakout candle if you have the highest volume of the day, or the high of the opening range if you have more of a grindy opening range. So in this case, my stop was above VWAP. If it holds above VWAP, it doesn't work. The other entry that really works on these is like a second chance style entry. So it kind of comes down, breaks the opening range, comes up, maybe even comes back into that low, but then rolls. That's a really good entry as well. And we saw that in this trade. It would have been a great ad opportunity, a great opportunity to get involved. So let's flip forward. So risk management. So, and I think this was the right call because you got to learn. So this trade was taken intentionally small to prioritize experience over P&L. I took this with C size because for me, I just wasn't ready to put big risk on this. Like I have in the past, and it's prevented me from experiencing the trade because especially with an expensive stock with a spread that moves a lot, all of a sudden you're focused on risk management and the size versus the trade. And I don't have enough experience. I'm not comfortable enough in these trades. Like the opening range break on the long side of the big dog is it's like my office. I'm in my office. I know what it should do. I know what the tape should look like. I know what it should feel like, it smell like. I know what a pullback should look like, and it doesn't bug me. And I know exactly where I should put on massive size. I don't know that in this trade, and I didn't see it in this trade. And that's me. That's not the trade. It was there. But, getting reps is what gets you there. So the objective was to gain reps, refine execution, and build pattern familiarity. So it also just didn't look like my typical parabolic short because of the earnings thing. 3 consecutive gaps, it goes up, and, it didn't, but it was. And I think that was more me thing too. Also specific, it had wide spreads, expensive options, high intraday volatility. It's touched a lot of prices. So that was also a piece is it's harder for me to control risk, and it's a setup I don't understand, or I understand, but I don't have a lot of reps in. So, I entered in the opening range breakdown. I had the high at the opening range. I had, clearly defined risk, tight relative volatility, and if the structure didn't hold, I was out. So let's talk about how I traded it because it's kind of sad. So I entered, opening range break. It broke the opening range. I had to stop at the high, and I actually sold or covered it into 600. And I really needed to have an imagination. But again, like the SNDK thing scared me, which it shouldn't have, which is like, this thing is the hottest stock in the market. People are going to buy it at 600 and it's just going to rip back up, take out high and go to 1,000. None of that happened. Right. And you can't know the context when it comes into lows, but you can kind of like have more experience with the bigger picture and remind yourself and have more conviction in the trade, which I lacked because of lack of experience, right? So I scalped something that should have been a trade to hold. And I think in the big picture of things, that's okay, right? But it is standing in my way of being the trader I want to be. So this is a good lesson. So it is not acceptable, right? So how should I have traded it? Thanks for asking. So I should have put a stop in the same place, but I should have entered with 60% of my daily stop. Why? Because this is the hottest stock in the market. It's up a ton. And if people are wrong, they're going to be really wrong. I think this is A sizing. It's not A plus sizing. It's not 100% of your stop, but I think it's 60%. I also think once it rolls and does a second chance, that you're either adding, or if you didn't get the 60% here, this is the place to get up to 60%. Because now look at that. Momentum comes in, the tape becomes clearer, and we get a flush. I do think where I got out is a decent place to take 30%. Lock in some profits. There is a chance that this thing, finds buyers and rips up, and you got to pay yourself along the way. I think 25 to 30% is probably right. And then you gotta gird your loins. You gotta remind yourself of the reasons to hold, the reasons to sell, and what your target is and the opportunity in this trade, and start shorting pops. So, we come into 600 and we push up, we roll and we fail the moving averages. I don't think it's right there. I think it's when we fail the moving averages, I think you can add. I wouldn't add so much that I bring my average too close, but I think, adding small amount at the pop is the right thing. And I think you let this thing roll. You could take a little profit into the extension, not as much as you added. And then, it pops up. And again, you lose the moving average a little high here. And you add again. And then at this point, when it rolls again, you don't sell anything until you see a backside. Because now it's on. The target is clear. You're below 600 and the next stop is 550. It's 50 points away. And you start to grind. It's not the easiest thing, but as we get into 230, momentum starts coming in, and now the game is on. We do have a capitulation, a backside, and once we put this backside in and see this volume come in, that is the time to cover everything and be done with this trade and go buy a Lamborghini. No, whatever. But it's time to celebrate because you traded this right. So, I think that is the way to trade this. It's a really good setup and it's a really good trade. So reading the tape, let's watch some tape. So I think the key moments are at the open. We got a stuff. We had an ORB consolidation where there was selling up there at the highs of VWAP. It got up there, but it didn't hold. And we had volume expanding to the downside when we failed. We had the second chance. So let's see what we can see here in the tape. See if it's fully beautiful now. Why is it so brown? Oh, because that's the... So you can see, we already saw this stuff here. And it's going to try to push again. Let's see if we can see anything. It's kind of blurry. But, oh, there we go. There's the color. 670, the bid stepping up, right? This is the moment where people are buying for the pre-market high break, right? Oh, it's going to push and we're going to go to 700, right? Nope. Can we try again? 675, the offer. 674. Oh, and we dropped 670. We just dropped 5 points. Like, we stuffed pretty hard, right? So now this is not looking so good if you're trying to long this thing, right? So you don't want to see this. You want to see this immediately reclaim. And the fact that it's pushing down and dropping, that is not good, right? I think if you have more tape skills and more confident in your tape reading, that's probably the spot that you can get short against high day. Not huge size, but like 5%. But now watch this. We try to push up again. And we're just we can't get it done. Right? Look at the bid, the offer drop again. Look at it's just dropping aggressively. There's not a lot of size on this tape. It's not super obvious from the size. I don't see anything size-wise, and it's not the most active tape. But there's a little bit of size in the offer. But not a ton. Yep, size showing up again. But, I mean, on the 1 minute, this is really a lower high, right? So, like, you're not wrong if you're short against the highs here. And if you're not short against the highs, you're probably short against the highs now, if that's your entry, right? So that's, like, the first key moment in the tape. And so now, you know, we've established kind of a low. So we'll see if that holds. And it does align with kind of pre-market resistance, right? That 650 level, right? So how well does that 650 level? Because that was pretty good resistance. It took us a while in the pre-market to get through it. We had 2 attempts, but we did rip through it. And now I'm kind of forwarding down to and I probably should have watched the tape there because that's probably another entry. But you know, since I'm an ORB guy, this is my office, right? And I did feel more comfortable in here, but I think, you know, SNDK just it's been a little tough trader for me, but you know, this is the day to hit this thing hard. And I probably should have, right? I'm going to say that, and every trader said I should hit it harder. But, you know, I think it did give me a different experience and perspective to trade a little smaller. The biggest issue was just not holding for the move more than the sizing. But you can see, like, look at all the wicks. We're looking at a 2-minute time frame and you know, rejected. So, like, we're not holding. We're really struggling to hold. But we're not breaking yet either. So, you know, nothing clear on the tape. We're at 946. So the opening range low now is in, right? It's like this area. So like 635-ish zone. And your risk is kind of established now because it's probably like in here, right? Which aligns with this pre-market resistance too. So that's kind of like your entry and your stop. So that's at this point kind of what I'm looking at is sniffing at this saying, is this going to be an opening range break to the downside? Because that's an entry for this trade. And that's part of my plan, right? Look for an opening range break to the downside. Look for a weak open, maybe a stuff. Kind of got that. Now we're holding below a key level. Kind of got that. And we're setting open every range, and we're seeing some selling. And, you know, at the highs here, it also kind of was pretty clear that we were getting hit. Like, if you look at the offer, it drops pretty aggressively at the highs. Like, people want to sell it at 650. They're not buying it at 650. People are seeing 650, and they're like, oh, I'll let you have some at 650. And there's some size on that offer. Now we're going to push down, so now we can see kind of what the selling or buying looks like, right? Like, are they buying it down here, right? Because if this is going to be a turn, people should be buying it aggressively at the lows, right? That's what we'd be looking for. Is we looking for the bid to step up, not the offer dropping. But there's no aggression here. Like 643 is just stuck. 641. Oh, we dropped. Let's see if we can see the moment when we actually drop. Let's see the entry. I don't know exactly when it is, but let's see if we can see it. But the lows are, you know, we got to print the low. And we got to see a little bit of acceleration to hit this thing. We're close. 639. Let's see. 638. I think if we see a flurry of selling here, this is the spot. 637. Yeah, man. Right there, that little flurry at the lows. So the offer drop, I hit it. Stop right up here. And that's the entry for me at least. You know, you saw that little flurry, and now we're going to try to push up, see what happens. You just got to sit in it, sit through it, see what happens. But you're wrong. You know, if it gets above 650, really 650.50, you know, that's kind of my level. It shouldn't really rebid there. It might wick up, but I'd want to be above those wicks, above those moving averages. Give it a little space. This thing touches a lot of prices, but it's not buying here, right? It's getting heavier. Can you feel it getting heavier? Like it's pushing up less and less. The buyers are seeing like, hey, this is probably not going to get bought. And so if you're like long this thing from after hours, like you're probably like, gee, maybe I should get some sold at 640 before it goes to 630. So I think, you know, the psychology starts to shift in the participants at this point. And, you know, we're still struggling now. Like the up thrusts are getting weaker. Still pretty inactive tape compared to like a Tesla, you know, but we're also doing like 500K shares, which I mean, Tesla does 500K. So this is not like not doing a lot of shares. It's just an inactive looking tape. It's, but it's heavy. Like you can see and feel the heaviness in this tape. So, you know, now 637 and we're just kind of grinding down. You know, it'd be interesting to see if we push up and what happens at the moving averages now, right? Because we're not even touching them. We're getting extended off the averages. So, like, you know, we're getting pretty extended here, but no one's stepping in to buy this thing. You know, so that's kind of interesting, right? Because let's see if the buyers show up. No, the buyers are not showing up. And you know, if anything, the sellers are showing up. I can see like it's selling harder as we go down. The retracements are getting less and less. And now if you're long this thing, you're hitting out. Like look at how far extended we are off the moving averages now. And nobody's coming to buy it, you know? Like it's no bueno. If you know, you're hitting this thing. Momentum traders are hitting this thing. You know, now we're all of a sudden down 7 points. You know? Like we were talking about 637, now we're at 630. And nobody's stepping in. You know, the next spot is like 620. So now we're try to hold 630, right? So people are brave and stepping in front of this falling knife now, right? They're gonna long it. They're gonna catch the reversal. You can see those reversal traders starting to step in. They're gonna buy the dip, and let's see how it works out for them. And what we're producing now is a second chance, essentially, right? So that 640 level, we really don't want to see us hold and step up above that now. It's kind of like the round number near the low, the 15-minute opening range. So we're just stepping down. Nice and easy. Just lowering the coffin into the grave. But we're trying, and you see how anemic this is? Like a strong bounce is strong. Like this is struggling. Like people are hitting this high right now. You can see it on the tape. You can feel it in the tape that people are hitting this high. They're not buying it. Like look at the bid, how anemic it is. 633, 10, 20, 631. It just dropped again. 632. We can't even get back to 633. It's like we're just like we're on the edge of the cliff and our fingernails are kind of like scratching away and we're about to slide off the cliff, but I think we're still going to see a second chance here if I remember the price action properly. But that, if I kept recording it, which I think I did, we got lots of time here, is going to be a pretty good version of a second chance, right? Because it's like, look at the bigger picture again. Like we always say, well, when's a good second chance? Like this thing is failing. It's up 2,300%. It's just went gapped up 150 points. It hasn't even been able to see VWAP in like 10 minutes. And now it's going to try to push up to the opening range. And when it rolls, that's a pretty good second chance. So if you're not in it already, you should be thinking about it. And it's a good spot to add. Oh, and look at this. We stuff. That's what I want to see for a second chance. See it now? Like, you could get in here right now. Like, it just rejected hard from that level. And now when we take out the low, now we're going to see momentum come back in. So I think that's the end of the tape, which is pretty good. So that was fun. Okay, so let's talk about technology, which is my favorite little toy now. So I am becoming more bionic. So here is my bionic trader stack in my process. So I trade with DOS as a discretionary trader. I have Ambi Broker, which is a advanced like coding based platform for back testing as well as automated or quant like execution. I use IBKR for my executions, and I use Dave Mabe's Mabe kit. Dave is Garrett's mentor and part of the SMB universe, so I feel like I'm not promoting someone who's out of SMB, but he has a good connector that can connect to DOS or to interactive brokers, which allows me to execute trades automatically. And then I use Thinkorswim for custom script like indicators. I use it intraday for my day trading charts because I think DOS is underwhelming in terms of indicators. I build filters in Thinkorswim, and I use it for pre-market idea generation. I also use trade ideas, and I struggled with trade ideas for years, but Dave has really helped make that make sense because I use real-time alerts, but they're back-tested alerts. So every alert I have in trade ideas for my trade setups, I've run back tests on that data, and I've optimized those alert criteria to make those indicators and those trades meaningful. They have edge. They're not just random alerts that are set based on some random pattern. And I use their scans for discovery to pre-market. And then for optimization and edge, I use the Mabe kit. I use the strategy cruncher. So I have, hundreds of custom columns in my back test to identify what are the specific features or attributes of the trade, whether it's distance from a moving average or an indicator that tell me that this is the trade I want to take. I have a custom GPT that I've built that's AFL focused, so in ChatGPT, that allows me to help script Ambi Broker formulas and translate patterns and trades into or market structure into AFL code. And I also use it to interpret catalysts, environment, and sentiment. And then I use X for breaking news, real-time information flows, and market context. I'm in the process of building additional custom alerts that are back-tested. I'm really focused right now on mean reversion, entries, and exits since they're not my A area. Instead of trying to struggle around and learn on small size discretionarily those trades, I want to add them as automated trades because I feel like one of the reasons I didn't do these trades in the past is they weren't the most natural, my favorite trades. And so I'm just going to have a robot do it. Call me lazy. And I love trading the momentum, but I'm building momentum robots too. And I'm going to reserve my manual focus for A and A plus discretionary setups. So that's hard to move away from some of this stuff, but I feel like that frees me up to do other stuff. And I'm currently forward testing 6 fully automated scalping strategies to complement my discretionary trading. Most of those are momentum, and I'm working on mean reversion now, and they're in various stages of development. So I'm a hybrid discretionary systematic trader. And there's my architecture. So trade review. Wow, we're getting to the end. That's good because it's been long. So what I did well. Appropriate sizing. I used small controlled size given my limited experience, protected capital while staying involved. I got to feel it, smell it, taste it, experience it. I think I was disciplined. I stayed calm, process driven despite discomfort. That was an uncomfortable trade. It's expensive, it's spready, it moves a lot. I stepped into an uncontrolled trade to gain experience. I prioritized learning and execution over P&L. In the past, I would have sized it up even if I wasn't good at it because I wanted to make money. And I want to make money, but I make money trading what I'm good at, not what I'm learning. So I try to learn separately, or I'm trying to. And I think that's a big like movement because like, you know, we can get caught in shiny objects in trading, and part of like really growing is to recognize like when you're learning stuff, you got to learn stuff. And when you're making money, you make money. Um, so what I learned is this is a variation of a setup around earnings that I had never seen before in 2.5 years, which is not a long time. So there you go. Now I see it. It's not my classic triple gap, but expands any definition of a valid overextension. This was a great example of the rubber band stretch. This thing was just stretched so far that, the earnings acted as a second stretch. And I think, I need to have an imagination. I think I understand how far things can go, but I underestimate it at real time. So I need to work on, really defining this before and really kind of building a process to do that better. There was no structural exit reason. Like the sizing doesn't bother me as much as the exit. Like I'd rather take a trade with small size and hold it all day long and trade it right than take a trade with huge size and scalp it out. Or what's worse is take a learning trade in small size and scalp it out. So that was unacceptable. And really my biggest regret from this trade is not the money I didn't make, but the experience I didn't gain. I think that there is a miss in terms of the experience too. Like you trade more of these and you understand where things can go. And then so next time I can hold the core for the full thesis, even as the whole thing. I need to do better at predefining exits. I can partial. I could have taken something off. I also should have, because I love to trade options, but SNDK options just haven't been the best thing for me because they're spready and expensive. And I'm sure with earnings, I didn't even look at the premiums. They were probably ridiculous. So maybe they weren't as good opportunities as they could have been. But I guarantee that buying like something just above the gap fill when the price action confirmed we broke the opening range was probably pretty cheap and probably worth the risk because it probably went to a ridiculous number. And, I probably should have added it to the playbook. And then, if structure holds, I need to let the trade work, and I need to build a sizing progression plan for these trades because I can't just sit there and trade them at small size, but I need to figure out what level of experience I need to have with these trades to size them up, and I need to have a good plan to do that. So that is the end of my playbook, and I hope you enjoyed it. If you did, now I sound like a YouTuber, which I'm not really. Give it a like. Hit me up on the SMB Discord. Be my friend on Discord. Ask me questions. Tell me I suck and that I did things wrong. I love feedback. So if I didn't get it right, if I need to do things better, if I can improve my playbook, if I can improve my trading, give me the feedback. I'm happy to hear it. And if you made it all the way to the end, thanks so much for listening to this. If no one ever does, that's great because I learned a ton of stuff by doing this. And I'll see you in the next video.